Today, we're talking through the 3 Fs. So frameworks, finance, and funding. So there's a lot of material to go through today, but really this is a session to take you through structures and finances and financial reports, and also about thinking about how you raise funds for your venture. So what we're going to talk about is we're going to talk about business structures, and I want you to think about the business structures basically as the house for your business idea. And so there are various ways in which you can house your business, and we'll talk through some of those structures. We'll recap what's in a business plan and what it's for, and take you through kind of the next level down of what you'd need in a detailed business plan. You guys hopefully by now have gone through your initial business plan on a page, and this will just take you through some of the more detailed sections that you'll want to start thinking about as you develop out your ideas. We'll also think through in a little bit more detail about your revenue model and fundamentally how your business is going to make money. Patrick took us through one kind of way of thinking about revenue last week. I'm going to take kind of one step further into the different facets of how you might make money within your business. We'll then get into a bit more of the financial section, and primarily what's in the 3 primary finance reports. And again, why you need them and what you need, what information you'll need to be looking for in those finance reports. Then we'll talk about profitability of your product and how you calculate your profit on your product or your service, and then talk you through some of the ways in which you can fund your idea. So there's various ways in which you can raise money to get your business going, and we'll talk through some of those aspects. And that'll be a lot of information to get through. And then we're going to break it down a little bit into what next in terms of the plan. Okay, cool. Any questions before I kick off? No? If you've got questions as we go through this, please feel free to shout. But equally, if you want to wait until the breakout rooms to go into a bit more detail with your individual mentors, that'll be the time when you can ask questions as well. So, but I'm very happy for people to ask as we're going through, because obviously there's a lot of information here. So happy to answer questions as we go through. Now, I apologize in advance for how much details on this slide. Usually I hate very busy slides with lots and lots of words, but when we distribute these slides afterwards, it will give you a chance to digest in a bit more detail the structures. And so these are basically kind of the 4 types of houses you can have for your business idea. And we'll go through some of the key aspects and the differences between those 4 structures. Mm-hmm. And just want to say up front, we're not giving you advice here in terms of what structure is right for your personal circumstances. This is general advice. That's my accountant's caveat. So there's basically 4 types of main business structure you can use. The first one's a sole trader. Then you have a partnership, a company, and a trust. And they go in, actually, maybe I'll flip these slides a second. They go in increasing cost, complexity, flexibility, and asset protection. So just at a very general level, as you move through these 4 structures, from sole trader through to trust, they get increasingly more expensive, they get increasingly more complex, but they also get increasingly flexible for personal circumstances, and they get a bit more flexible in terms of asset protection. So as with most things, the more complex it is, the more expensive it's going to tend to be. If we just go back to the detailed slide. So I'll go through kind of each of the individual ones. So a sole trader, which is how a lot of people start when they first start out with the business. So a sole trader business is where your assets effectively don't have a separate presence from yourself. So you are your business and you're legally responsible for all of those aspects of your business. There's no separation between you and your business from a legal perspective. And the tax office, the ATO, doesn't see any difference between you and your business either. But because of that, it's very simple and inexpensive to set up. Basically, you can just get an ABN and get going. There's some, there are some practical measures that I'd suggest you put in place to make your life easier, such as, having a separate bank account or having a separate credit card for the expenses of your business, but you don't have to. All you essentially need to do is have an ABN. And then all of the income you get from your business and all of the costs that you get from the business are all kind of tied up with your personal circumstances. So it's very simple in many ways. But the issue there is around liability. So you've got unlimited liability because you and your business are the same thing. And your personal assets may be at risk if things go wrong. So that's kind of the downside to doing it as a sole trader. There's no split of profits. All of those profits belong to you as a person. There's no separation between you and the business. And then because of that, from a tax perspective, you're personally liable for all of that net income. Okay. So that's the sole trader, and that's probably the quickest and easiest way to set up. But as your business gets more sophisticated, or even kind of an issue that, Sid's raised your hand.
Thanks, Michelle. Just a quick one for sole traders as well. That tax component that you were talking about, Michelle, there is a disadvantage to being a sole trader, that your tax rates increase as you make more money. So in Australia, we do have a progressive tax system. The more money you make, the more money you pay. So once you're over $180,000 in income, you start paying the top marginal tax bracket. So, 47% tax for every dollar. So if you earn $1, it's going to be 47 cents out of there going to the tax man. And I think in comparison to the other entities, especially company and trust, there are tax benefits. So I can touch on that later. But yeah, just wanted to add that piece.
Cool. Thanks, Sid. Partnership is very similar to a sole trader, but it's where you've got two or more people involved. So I know there's a few people on this program with us who have co-founders. So that's kind of the two or more person equivalent of a sole trader. Again, because it's not a separate, your business isn't a separate entity, it's relatively easy and inexpensive to set up. There are really minimal reporting requirements, but just bear in mind that partnerships are governed differently depending on what state you're in. So you may want to look at, I think most people on this cohort are in New South Wales, but just bear in mind that partnerships are governed differently in each state. There's a bit more protection around liability, and it depends on the type of partnership you set up and the agreement that you have between the partners in the partnership. But there's still more liability than with a company because of that concept of not being a separate legal entity. How your profits are split will depend on your partnership agreement. There may be reasons for which it's not a complete 50-50 split. For example, if one person might be solely dedicated to the business, the other one might be doing it while still working in a full-time or part-time job, potentially. But you can define that in the partnership agreement itself. And then from a tax perspective, the partners will pay tax on the share of net income they receive. And to Sid's point, that will be taxed at personal income rates, income tax rates. Right. Then we get to a company, and a company is the first way in which you can protect your business as a separate legal entity. And so from a legal perspective and a tax perspective, that business is completely separate from you as a person. And there's a whole bunch of, outside of the tax you pay, there's a whole bunch of reasons why that might be more appropriate for you. Again, the main ones are around liability. Because it's a separate business and because it's a separate entity and is almost treated like a separate person under the law, you as a shareholder aren't liable for the company's debts. So when you hear these stories about people walking away from companies sometimes, and there are limits to that, they're not necessarily personally responsible for the company's debts as a shareholder. The thing that you do need to bear in mind, though, if you are a director of that company, and it's very likely that you as a founder would be the director of that company, you have responsibilities, you have legal responsibilities around how you conduct that company, your conduct within that business. And you can be personally liable if you breach those obligations. Sorry, just jumping up again. So in terms of setting that up, it's relatively inexpensive, but there are costs involved in setting up a company. And there are higher running costs and administration complexities because you will have obligations for certain filings under the Corporations Act. The split of profits, though, you can distribute via dividends, but that's only in proportion to the shareholdings. So, for example, if there's two of you involved in the business and you both own 50% of the shares, if you issue a dividend, you have to issue the same amount of dividend to each person. There's ways of managing how you get money out of the company in terms of, there can be directors' fees and wages, for example, that you can pay to yourself as a director. But in terms of profits and to get that taxed at the company profit rate, it's only distributed via dividends. But in terms of tax, that the company is responsible for its tax obligations, not you as a person. Sid, is there anything you want to add to that before I move on to trust?
Yeah, just more specifically on the tax rate for the companies for this current financial year. Well, not current, the 21 financial year that just went past, you pay 26% tax on your profits if you're a small business. Small business being revenues up to 10 million. So, there is a big difference in tax rates if you do operate as a company. And then this financial year, which is going to be the 30 June 2022, the tax rate is dropping again to 25% for small businesses. And yeah, so you can see a big difference between 25% and 47%. So on $1 million, you're saving, $220,000 or something, if my math is correct, probably not. But it is a very material amount and something that should be considered when choosing the right house for your business.
So I have a question, Sid, on that, and Michelle. Like, if like in my business structure, which is already operating, I'm not a sole trader, but I'm a company, but I'm a one-man band. So I have got all those personal services income. I can't retain the profit in the company. I need to distribute or attribute every single cent to me, and I'll be paying 47.5% tax. So unless my business become larger business and then I break all those criteria, then I'm good with the company. But right now at this stage, I'm as good as sole trader, but I'm just protecting my liability.
Yeah. Good
So
point there.
yeah. So any tips on that?
Yeah, good point there, Sanjeev. Thank you for the question. So, just a couple of points to clarify. The 47% tax rate is inclusive of the Medicare levy of 2%, so that brings up 45 to 47. To get around PSI, personal services income, there is like a main rule that if 80% or more of your income is from one source,
Yes.
if you have one customer and they're 80% or more, it's likely to be personal services income. So it just flows straight to you and you pay the 45%, as you said,
That's right.
The way around that is, there's not too many ways around it. You just need to get more customers so that
get more clients.
More client or more people where I'm earning from the various sources. Yeah,
that's right. Building various sources, and I think you mentioned like how to diversify your customer base. So I think we can cover that in sessions 4 and 5 on sales and marketing, and hopefully we can discuss some ideas.
Okay. So I think then I will have one question more once we talk about the trust as well, whether to trust or not to trust, sort of thing. But we'll talk about that later on.
Very deep question. Okay, so moving on then to the trust. So the trust, and I trained in the. I'm a chartered accountant. I trained in the UK. UK doesn't really have this concept. When I came to Australia, I was like, why is everyone so obsessed with trusts here? There are some very good reasons, but it's not always appropriate because it is quite a complex and costly way of setting yourself up. So you need to make sure you're going to take advantage of those benefits before you go to the effort and the expense of actually setting it up. So what a trust is that there's a trustee which holds the business for the benefit of the trust beneficiaries, which is ridiculously complicated. And so it's quite expensive and complicated to set up. It's quite expensive and complicated to operate. You do need more, more detailed tax-specific advice, not only to set it up, but also kind of in terms of how you operate it. But in terms of the protection around liability, it gives you the same protection as a company does. One of the key things that it can help you with is, whereas I was saying with the company, you can only distribute those profits in proportion to the shareholdings. With a trust, you can distribute those business profits as the trustee decides. So what that can mean is that if you've got a family trust, which is quite common, if there are people within the family who, or the trust beneficiaries that are paying tax at a lower rate, you can distribute profits to those people. Again, it's very, very, very much a question of trust, that you can distribute the profits to those people disproportionately because they will pay less tax. So if you're thinking of it all in the same pool of assets, then it can lower how much tax you're going to pay. And if it sounds a bit complex, it's because it is. This really is something that I think that you do need specialised advice on for your circumstances. But if, for example, you've got a family trust where you've got adult children or a partner that doesn't earn as much or maybe doesn't earn anything separate from the business, it can be quite useful.
Yeah. So, Michelle, question on the trust. So, where do the trusts get the income from or profit from?
The business.
From the business, yeah. So, if business make the loss, then trust can't distribute the loss. That's right.
Correct.
Yeah. And this liability box also, the trustee are liable for the date of the business as well. So we are losing that protection as well. If someone link with the company with the trust, then if the company make the loss, then the trustee will be liable for those loss from the company as well. That's right, or no?
Yeah, generally not. If
No.
the agreement or the contract in place with your customer is with your
With
operating
the
business, so
company,
your
yeah.
operating company, then everything is to do with that. Usually, it only flows onto other entities if the legal matter in question with the operating company is beyond what it can pay. It can tend to look into other entities. So, but trust with a corporate trustee is generally quite secure. It's like one of the more secure structures in Australia. So there is protection there, but loss doesn't really come into it in that sense. If the operating company does something illegal, like malicious, or creates damages, and this can be covered in the legal section. And George, feel free to jump in. George is a legal expert, so yeah, it's unlikely to affect yourself.
Yeah. Okay, but things get complicated, as Michelle and you said. Yeah, as soon as we go on the right side, then it's getting complicated. Yeah.
It can. My personal view is that you've got to have a lot of assets to, I think, to make, or a lot of people to distribute it to at a lower tax brackets to really make it worth it.
Yeah. And look, I think one of the advice I was given, probably I think you would give the similar sort of advice. If I have got like investment trust and it's just all the income coming from the investment, then the advice given to me is don't combine your trading activity with those investment trusts and everything, and keep it separate. Because in the trading or the company trading or any of those sort of activity, the risk is more, and risk is more for losing the money. Whereas in the investment, well, equally, I think more risk on that too anyway. But yeah, you start losing money on the trust and you can't distribute. So you can keep carry forward your loss year by year until you make the money one day. So anyway, yeah. You might have a slide next for pros and cons anyway for each structure or something like that, or even
Well, I mean, this table here really tries to set out what the pros and cons are, because they're largely around liability, the flexibility in distributing profits, how tax is calculated. What I might do actually is I might just add the tax rates in as an appendix slide, just to show kind of people the difference. But also, I mean, it's not that straightforward in that from a company perspective, if you're wanting to get money out from the company through wages or directors' fees, for example, well, that will then end up being taxed at income tax rates if you take it out like that. So there's a bit to think about in terms of those structures and how you get money out of the company and the trust into your own personal bank account.
Yeah. Okay. Thank you.
Does anybody else have any questions before we move on? And just to say, there's a lot to digest in this table and just generally with these concepts. So this is very much kind of a starter slide to help you start thinking about some of the key points in deciding what your structure or your house might be for your business.
If you do
Michelle,
need to,
I've got a question. Oh, sorry, Sid.
So you can ask your question, Monica. Sorry about
sorry. Just wanted to check, with a trust, can a trust hold profits, or do they have to be distributed at the end of each financial year?
They've got to be distributed.
Yeah. And if you need to determine which is the best house for you, definitely speak with an accountant or lawyer to help you make that decision. If you need any connections, please reach out to us.
Yeah. And just as an add-on to that, I mean, I'm a member of a few Facebook business groups and kind of, startup groups, and there's an awful lot of information flung around in those groups by people that aren't accountants, that just are quite fundamentally incorrect in some instances. So just to reiterate, what Sid said, please ask an accountant if you're not sure, and a tax accountant specifically, because this is really quite an important decision. Don't overthink it, but it is important. Okay. Okay, so now moving on back to our business plan. So this is kind of really taking that next level down in terms of the business plan and your business planning process. That one pager that we talked about in the first session is a really good starting point. But if we're talking about a business plan which you're going to need to use for potential investors or potential lenders, for example, your bank, you're going to need a bit more than that. And also, I'm a big believer in, I think you personally, as a business owner, will need more than that in terms of getting that next level down and fleshing out your idea. Even if you don't do it before you start your business, I think it's still very appropriate to do when you're thinking about growing your business or diversifying. It should just be, I like to think about it as a touchstone for how you think about your business, particularly when you're thinking about why you started the business, who your customers are, what your strategy is. It can be quite easy when you first go into business to chase after any and all money and revenue streams. And I think it's really good to have a business plan that you can refer back to say, no, what exactly did I start this business for? What's my objective? Who are my customers? What are my goals for this business? And it can stop you going down rabbit holes with your business as it starts to accelerate and starts to get bigger. And so in terms of the when, I think it's really useful before you start your business, but also, again, as you're growing your business, and particularly if you want to raise funds, whether that's through investors buying into your business or borrowers lending you money to grow your business. And these are the things which will go in that detailed business plan. I'll come back to the executive summary, but the industry overview. So detail about exactly what is the business that you're in and what's the framework you're operating in. Your market analysis, which will include the competitive framework, who else is doing what you're doing. We talked through in the last session the addressable market concept. So this is where you'd go into some more detail about thinking about your market and what's the addressable market, what's your target market, and therefore you can kind of start narrowing the field in terms of who you're actually going to go after in terms of your customers. A SWOT analysis, which is strengths, weaknesses, opportunities, and threats. And broadly, the strengths and weaknesses are the internal factors within your business that you can control. The opportunities and threats come from outside your business, but thinking through the opportunities and threats lets you think through how you're going to react to those external forces. And that can be quite helpful in framing both that internal and external. Your sales and marketing plan, which is should be fairly self-explanatory, and the next couple of sessions after this will go into a bit more detail in terms of how you build out your sales plan, how you build out your marketing plan, and for those of us that are newer to the area, what's the difference between a sales plan and a marketing plan? Because there can be overlap, and in some businesses there's a lot of overlap between your sales and marketing plan. And then thinking through your team. When we shared that first top 5 strengths, or big 5 strengths, What that should have done is to help you illuminate a little bit where your strengths are within your business and where you might need advice or help. Now, your team might not be employees. There's a whole bunch of reasons why you may not want to have employees straight off. You may want to employ freelancers or contractors. You may want advisors such as legal advisors or finance advisors. They don't need to be employees, but they still form part of your team that's going to make the business successful. Then thinking through how that team operates, what the logistics are within your business. I know some people within this cohort are looking at products. So where do you source materials from? How do you make your products? How do you distribute your products? All of that comes into logistics. And if you've got a perishable product for the people that are thinking about food type businesses, that has an extra degree of complexity as well. And then technology. The amazing thing about startups today is that there are so many technology tools that can help you run your business, from ways of kind of streamlining processes to transacting online to managing your finances. It is a whole different world than if you were starting a business even 10 years ago. I started my business 10 years ago now, and half these tools weren't available, and they certainly weren't as widely used as they are now. So it really makes starting your business, you almost get these big business opportunities right from the start, which is obviously fantastic. And then risk and legal framework. And I know this, this stuff feels even drier than the finance, right? But it's really important around, legally, what you can and can't do. Insurances, you covering yourself. Have you looked at the risk in your business? And some businesses have very, very low risk, and that's great. But I think it's always important to think through what your specific risks are with your business. And it's something that you should revisit because things change. We're talking about external forces changing with the opportunities and threats. We've just been through a crazy 18 months with COVID interrupting a whole raft of different businesses. And again, that's affected all businesses differently and has affected their risk profile and the things that they need to consider from a legal perspective. I'll take a breath there. I've included a link at the bottom, just in general, just for you to be aware. If you haven't already come across it, business.gov.au is a really, really handy tool. Has a lot of templates that you can use for planning your business. And it's got a great business plan template in there as well that you can start to have a play with. Any questions?
Yeah, I do have one.
Yep.
Michelle, for a non-for-profit organization,
Yeah.
for a charity,
Yeah.
I also need to get an insurance.
All businesses need insurance, is my view, particularly around professional indemnity and public liability. And apologies, we didn't go through the structure for a not-for-profit because that is a separate structure and it is governed separately. It's governed by the ACNC as opposed to ASIC. As potentially you would expect with a not-for-profit, there are quite specific regulations and guidelines, even for a small new startup not-for-profit organisation that is different from companies and other similar structures. So apologies, we didn't go through that. But insurance, I think, the public liability and professional indemnity, I think, are basic insurances that every business should have. There's a lot of different insurance that you can buy for your business. Not all of them will be appropriate for your business. Again, part of your team might be to get a good insurance broker that you trust, that can help you assess the risks within your business. For example, cybersecurity insurance is, very popular at the moment. I don't think it's appropriate for all businesses, but it may be appropriate for yours. So it's something you need to think about in terms of this risk and legal framework, which is why doing this detailed business plan, I think, is really helpful, because it starts you thinking about all of these individual points.
Great. Thank you, Michelle.
I've got a question.
Yep.
How much does both of those insurance costs, average?
It really depends on what kind of business you are in, because when you go to any broker, or even there's a lot of online brokers, you don't need to go and see an actual person, but you'll answer a whole bunch of questions in terms of what your business is, and the cost will vary depending on what your business is, but also, for example, it may have specific exclusions within your business. So, for example, my professional indemnity doesn't cover mergers and acquisitions. So if I give any advice in relation to that, then I'm not covered should something implode and someone wants to sue me. So, like with any insurance, please read the fine print. But the costs can differ quite wildly, to be completely honest.
And yeah, because I was just thinking, you do, so you recommend to get 100%, right? Because I've already gone through my business around 1.5 years and I haven't got it yet. So
personally, I would. You're a coaching business, right?
Yeah, correct.
Personally, I would, and it probably won't cost you much money, and hopefully you'll never need to use it. But it's there in case the worst happens, which is what all insurance is there for. Sorry, Sid, you wanted to say something as well?
Yeah, just in addition, the main criteria in which the pricing is affected is the risk of the business activity, and the second is the projected sales revenue. So those are two factors that usually the insurers take into consideration when pricing the product. There's a lot out there, insurance comparison websites, so I'm sure you'll be able to find a provider that would suit you well. If your business is a little more complex, then you wouldn't use one of those comparison websites, because you would need someone to fully explain what the policy would cover. But again, we can make introductions should you need.
Thanks.
Cool. Anybody else? No? All right.
Oh, actually, I just have a quick comment here. And
Sure.
when you sign up the insurance agreement with all different types of insurance company, and nowadays, and also be very careful. For example, if it's an Australian insurance company, and normally, and in the insurance agreement, we'll say the Australian law will apply. But if it's international insurance company, for example, based in the United States or other country, and we do need to look at the dispute resolution provision carefully, because sometimes maybe they refer to the law in the United States, Singapore, or sometimes they even say the Australian court will not have jurisdiction, and all the resolution dispute should be resolved through the arbitration. They even can refer to the legislation in other countries. That's something we do need to pay a little bit attention. A classic example in relation to this is we all use Facebook, but something maybe we don't know is if we have disputes with Facebook, and the law will apply is the law in Luxembourg, it's not in Australia.
Good old Facebook. Cool. Okay. Okay. Oh, hang on. Oh. Okay, stop. Okay, cool. All right. So we started started talking about revenue models in the last session. So we're going to talk about it in a bit more detail here. And it's a slightly different way of thinking about a revenue model than Patrick had introduced us to last week. This framework obviously isn't mine. It's developed by a guy called Ron Meyer, who's the professor of strategic leadership. And you can kind of look into publications he's written and kind of more detail on this if you'd like to. So if you look at this wheel, it takes you through the different ways in thinking about your revenue. So the first one, the red section, who pays, which sounds like quite a self-explanatory question, right? Your customer pays, you sell someone a book, the person who buys the book and walks out of the shop pays you for the book. It can be not quite as straightforward as that. The example that I like to use is a client of mine who is a digital marketing company, and their main clients, they produce marketing campaigns for IT resellers, so resellers of computers and printers and that kind of thing. And they produce the marketing campaigns for them to send out to their end users. However, those IT resellers aren't the ones that are paying my client. The people that are paying my client are the big IT vendors, so Dell, HP, Lenovo, will pay this digital marketing company to give what they called sponsored marketing campaigns to the IT resellers for them to distribute. Because those big IT vendors know that the IT resellers generally don't have the marketing capabilities or teams to be able to effectively market the products that HP, Lenovo, Dell, etc. want to sell. So they will go and pay for a marketing campaign that benefits these IT resellers, but really benefits them. So that's kind of an example of the end user not being the one that actually pays for the product. They're not the customer. For most of us, it's a bit more straightforward than that, but it is worth thinking through, particularly if you've got a more niche product, which I think some people in the cohort do. The green section, what is paid? Again, usually money in whatever form, whether it's dollars, pounds, crypto, but using the example of Facebook again, it can be data or information. There's the saying, if you're getting something for free, you are the product. And that's exactly Facebook's model, right? You get to use the platform for free, you get to connect, you get to network, you get to keep in touch with people, but you give all your data to Facebook for that privilege. So, there are different ways in which you pay. Facebook obviously then goes and sells that data to the advertisers and they make money there, but you personally are paying with your data to use that product. And that kind of leads us into the yellow section, kind of what is being paid for? So are you paying for a thing, a product, an item? So, I keep coming back to the books example, but a book, earrings, food, a thing, a tangible thing that someone will pick up and then consume or use. Or are you selling access to information or to be part of a group? So, you're selling a membership, whether it's online or in person. Remember when we did things in person? You can pay for access to be part of that group. You can pay, you've got freemium models on some groups where, there'll be a certain amount of information that will be free and be able to be accessed by anyone that accesses the website, for example. But in order to get the premium information, you'll have to pay, and then you go, access into a walled garden, for example. Or you could be paying for a result. So if you think about, if you're fixing computers, you can pay for a person's time to fix that computer, or you can pay for the fixed computer. And if it's not fixed, you're not going to pay, or it's only going to cost you $200 to fix your computer, as opposed to, I don't know, $50 an hour, and you don't know how long it's going to take. So what are you actually paying for? Then in that kind of lilac section, how are you paid? So there are different ways in which you can get paid. So you can get paid per project or per product. And so, that has pros and cons. You're going to get paid for that project, for that product you deliver. But you have to keep on selling under that model. You have to keep on making the thing. You have to keep on delivering those projects and winning new projects and winning new customers. There's then a recurring revenue model, and this is usually where you get these big valuations for companies, because everybody's on a recurring revenue model. So you might not pay very much. You may pay a few dollars a month for access, in this example, to a group or membership of something, and then you will get that regardless of what the customer consumed. It's like a gym membership, right? So you pay all this money to the gym, and then you never go to the gym, and the gym doesn't care because you're paying them every month anyway. So that's, again, sort of a recurring revenue. I've got someone asking a question. Oh, Monica's saying bye-bye. Bye-bye, Monica. Then the final thing is how much is paid. And we'll go into how we'll cost some things in a second. But there's a whole bunch of considerations here when you're talking about how much you're going to charge for the thing that you offer. This is why this is round at the end of the circle. Because you've got to work out what it is you're offering first, how you're going to offer it, what you're actually selling. And then you're going to work out how much you're going to get paid for it. So is it profitable? Is it actually going to cover costs plus some? But how much is the market going to pay? So you can't penalize the market if, for some reason your costs are sky high and you can't, manage the cost within your business. So you've got to triangulate it with how much the market will bear. Will you, when you start your business, effectively subsidize your customer to grow your business? So you may know that in order to be profitable eventually, you might need to sell your thing for $100. But actually, you might initially sell it for $80 because you want people who might be price sensitive to buy it. Or you might want to give discounts for volume or for repeat business. And the reason why you might do that is winning a new customer is always more expensive than keeping the ones that you have. So you might find some way of incentivizing them to stay with you. Or which is what a lot of businesses do. They'll incentivize by giving a discount for volume. If you think about retail, you'll offer one price to someone that walks in off the street into your shop and buys the one thing, but you offer a different price to someone on a wholesale who's going to go and maybe sell your products for you somewhere else, or just really like the thing that you're buying. So those are some of the things that to think about in terms of the revenue. Cool. Any questions? Oh, this is a lot of information. Okay. All right. I will move on. I'll move on. There we go. Okay, so if I haven't killed everyone with the revenue model, here's the 3 financial reports. Does anybody need to take a breath? It's a lot of information. Okay, so there are 3 reports, 3 key reports when we talk about financial reports, and they all tie together. Firstly, and there's 2 reports that you're probably the most familiar with, and that's your profit and loss and your cash flow. There is a difference between those 2 reports, and we'll go through what that is, because for a lot of people starting to look at finance reports for the same time, for a lot of people starting to look at financial reports for the first time, it can be difficult to work out what the difference is between your profit and your loss and your cash flow. So your profit and loss basically shows you the profitability of the business, so your income and your expenses, completely separate from the timing of when that income and those expenses happen. And that's the key difference between your profit and loss and your cash flow. And I'll go into this in a bit more detail in a second. So your cash flow will show you the timing of the money that's flowing in and out of your business. And then your balance sheet, again, to go back to my house example, the balance sheet will show of your business how much you owe in that business and how much you own. So for example, if you think about a house that you've got a mortgage on, you have your house and you're sitting in your house, but the bank owns half of that house. So your balance sheet only shows half a house. So that's kind of how to think about the balance sheet. It's probably the one that you will use least, particularly firstly coming into the business. But it is actually a really important financial report, and it ties your profit and your loss and your cash flow together. Any questions? Everyone's
Well said.
to be awake.
Really
So
well.
good. Sorry, Sid.
Oh no, well said, Michelle. I think that explains it very straightforward. Yeah.
Cool. Okay. So now I'm going to show you the difference between a P&L and cash flow and why they're not the same thing. So, okay. What I've got here on these tables is the difference between a cash view of your business and the P&L view of your business at exactly the same time, okay? So if you think about, this is a month in your business, and I don't know why, but I always kind of use the example of a bookshop. So I'll go through line by line and I'll explain kind of the lines and the differences as we go through. So you've got to have a good month in your bookshop. You've sold all your books. And so people have forget people owing you money. They're all paying with cash. And you get $2,000 into your business that month. Brilliant. But then you've got to pay your costs. So you've got people working for you in your bookshop. And so you're going to pay them for that month. Now, in that month, you actually pay out of the business net wages. So those net wages, you know, when you get a pay slip from your employer, you know, you look at all of the deductions and all the things you didn't get from your salary. The business is only paying you over cash those net wages, but it doesn't get to keep those net wages. It's basically become an unpaid worker for the ATO, and it will hand over that tax that it's collected on the ATO's behalf over to the ATO and also your super. But a lot of businesses only do that quarterly, which is what they're allowed and responsible for. So even though I only paid $400 in wages this month, cheap employees, the real cost to that, which I can't keep, is $630. Okay, so there's a difference there. Then let's pretend I just moved into my bookshop. I had to put down 2 months of deposit as well as the month I had to pay in my rent. So even though my monthly rent is only $200, I've sent $600 out of the door. So I don't have that cash in my bank account. Then we go on to insurance. A lot of insurance you pay kind of once every 12 months. So I actually paid $600, but I only used 1 month of that. I get to use that insurance for the whole 12 months, and it benefits me for the whole 12 months. So in my profit and loss statement, I'm only going to recognize 1 month of that cost. Then we'll get to the computer. So I bought a computer. That computer is going to last me 3 years, I hope. So even though I paid, well, it's a few computers, I paid $3,600, I'll only use 1/36 of that this month. And then we've got electricity. I was able to turn the lights on and off in the bookshop, but I actually didn't get my quarterly bill this month, so I didn't pay anything. But I used a month's worth of electricity, and that's why there's a cost in my P&L. So once you go through all of those costs and the different ways of looking at it, I'm in debt if you look at the cash flow statement. So I've gone and borrowed some money from someone, but I've got a net cash outflow of $3,200. So it looks like a bad month. But if you look at the P&L version of that, I still made a decent profit. And all of that cash, despite the fact that I'll have to pay some of that money I held back from staff over to the ATO, I made money. It's a profitable business. And that's the difference between the two statements. And it's really important to see that view of both, because in the cash flow version, I still need to fund that shortfall. So I need to have money in the bank, or I need to borrow money in order to fund that cash flow. But and there can be some months where some businesses, you might collect your money in advance. So you might, get paid in advance for some things. But that money is not yours because you've still got to deliver a product. So it's really important to know what the profitability of your business is. And both those things you need to keep an eye on. Arguably, when you first get your business going, it's this cash view of the business that's going to be the most important, because you need to know that you can pay your bills. Okay. But long term, you need to know that you're able to make money and make money on a consistent basis.
Question, please.
Yeah.
So, with regards to the electricity, if you had, for example, a bill of $250 per quarter, are you going to divide the $250 into per month or quarterly to register it in the cash view?
So what I would have done in that instance is I would have had 200. I'm terrible at mental arithmetic. I would have had $250 cash out, so minus 250 in the cash view.
Yes.
Over here. I keep getting up a cursor. So I'd have 250 minus here, so I'd be behind by an even greater amount. But if I'd put the right amount into the P&L, this doesn't really change. So whether I pay it or not in the month, I still used the same amount. I didn't use 3 times more just because I got a bill. It's just that I happen to be paying for it.
Okay.
If it doesn't make sense yet, please don't freak out. This confused the hell out of me when I first started learning this.
It is a little bit to take in. Just think of it as cash flow simply as when cash enters and exits your bank account. The P&L view is it's based on what they call the accrual system. So it's like you're going to record whatever the amount is relevant for that period. So the good example is insurance. Cash flow wise, you're going to outlay the 600 straight away. But in the P&L view, for a monthly P&L view, every month will be $50, $50, $50, $50. And then at the end of the 12 months, the whole 600
will be used.
Catches up. So it's P&L is a timing thing, which causes it not to match up with cash. But for you guys, cash is going to be king. It's like if there's cash in the business, then we're good. So you'll be mostly looking at that. But when it comes to tax time and financials and investors, they'll be also looking at P&L view. Okay.
Okay.
And the cash flow, I spend a lot of time helping businesses manage their cash, because as you can see from these two schedules, you can be a profitable business but have no cash. And I quite often have business owners kind of going, I don't get it. I'm profitable. I can see it. I can see in my books I'm profitable, but how am I stressing every single month to make payroll? And it's because of this difference in timing between when you're using the things you buy and when you've got to pay for them.
Yeah, and just in the interest of time, we'll need to go into the breakout rooms in around 10 minutes. But one last point I'd like to make about this is, if I can remember it now, cash is going to be the most important thing for your business, because if you run out of cash, then you're just unable to keep going. So put more focus onto the cash side first. But in the long term, I remember the point. If numbers aren't your strong points, that's what Michelle will talk about a little bit about on teams. Like, who should you be looking for the advice for the gaps in your knowledge? So good accountants will help you with this stuff. So you don't need to be an accountant yourself. You can get, you don't have to be a lawyer yourself. You just find the right people to help you to understand and get to the next step.
Okay.
Cool. Thank you. So you'll be able to take a breath in the breakout room. So I just want to introduce, and we are going to send around these slides afterwards, so you'll get a chance to kind of properly digest it and ask any questions that you have. But I just want to introduce the concept of how you calculate your profit margin. So I've included again a couple of tables here in terms of how you work it out. From a product perspective, the thing that I want to make sure you're bearing in mind is a lot of the time when people are thinking about profitability of their product early on, they're mainly thinking about just the raw materials it's going to take to actually create the thing that they're going to sell. And that doesn't include a whole bunch of stuff, including primarily your time that it takes you to make that thing. So in the example over here, if you're going to sell something for $100, you may only have bought, whether it's inventory, stock, or whether it's raw materials to make the thing of $30. So you might be quite happily sitting there with a gross profit of $70 or 70% and be very happy with life. But what you haven't included, if you stop there, is the cost of your time, which is really valuable. I see so many people not taking into account the cost of their own time. And you need to make sure that that's being accounted for. As I was talking about in the revenue model, there may be reasons why you don't fully account for the cost of your time when you're working out your profit margin early on. There's a lot of talk about bootstrapping with businesses in the early days, and ramen noodle budgets kind of working out of garages, and you're not valuing your time at that point because you're building your business. But particularly if you, like most of us do, we all have our own living expenses. You need to account for your time and how much money you need to be paid for the time that you're investing in doing this thing. Another couple of things which you need to bear in mind when you're costing out your product and working out your profitability is you may have had to have bought equipment to make the thing that you're producing. And you may be incurring overheads, even if you're working out of home initially. If you're thinking about longer term and you move out of your house into a manufacturing space or something like that, you're going to be paying overheads. So when you're thinking about the long-term cost of your product, you kind of need to take those things into account. And going back to the cash conversation we were just having, you may also not just be able to buy small amounts of raw materials. So you also kind of need to bear in mind kind of buying up stock or buying up raw materials. You're buying ahead of the curve. So again, that's something to bear in mind when you're working out your cash flow. Then when you're thinking about if you're offering services, or even if you're trying to work out kind of what number to put in here for your time to produce, what I quite often see is people looking at their target annual salaries and just dividing that by the number of working days in the year. So 5 working days times 52. What that doesn't take into account is the fact that that means you're not going to have one single day of holiday. It means you're not allowed to get sick ever. And it also doesn't take into account public holidays, and it doesn't take into account the time that you need to spend on doing administrative tasks within your business, particularly when you're starting out. Business development, so the time that you're going to take to actually get new customers, new clients. So what I usually use for actual billable days is 210 actual billable days per year, and that's obviously quite different from the 260. And that you can then calculate down into your day rate, which technically is 7.6. A lot of people just use 8, that's how you calculate out your daily or hourly rate for your services.
Bit of a joke. If you're a business owner, probably account for a 16-hour day.
But don't price it on a 16-hour day.
Yeah. Do it by 8. I'm just making.
Mm-hmm. Cool. All right, I'm just going to quickly go through some funding, ways of funding your business. There's 2 main ways of funding your business, and that's through equity, which means selling part of the ownership of your business. One of the pros is it can feel like free money because someone's giving you money to invest into your business. And there's no need to repay it, and there's really no conditions with it, which is why sometimes when you raise money initially, it's from friends, fools, and family, which is rude but true. But the cons are, if you're going to build a successful business, what feels quite cheap and free initially can be quite expensive if you've given away, say, 25% of your business. And then you need to raise funds through selling part of your business later on. The part that you personally own as a founder can get smaller and smaller and smaller. That has an impact on how much you control the business, as well as, say eventually if you sell the business or do something like that, how much actually ends up with you as opposed to your investors. You've then got debt, which is quite a simple way of raising money, but simple doesn't always mean easy. A bank quite often, particularly for a new business, it can be much harder, arguably, than it needs to be to raise money from the bank. And also bear in mind, one, you'll have to be paying interest in cash, which I think everyone can kind of get their heads around. But usually, particularly if you go to a traditional bank, you'll be asked to give a personal guarantee as a director. And what that means is that if the company is unable to repay that loan, they can come after you personally. And that kind of breaks, how we were talking about the difference between a person and a company when you're setting up your company structure, and the fact that you aren't personally liable for the assets and liabilities of your business. This is where that can get broken. So, for example, if you're unable to pay your loan to the bank, they can come and take your car or your house or something like that. So it is something to bear in mind. There are starting to be, I don't know whether you've heard of kind of what they call neobanks like Judo Bank, and specifically set up to fund startups and small businesses. It can be slightly easier to raise funds through them, but generally interest rates are higher, and I always read the fine print for that one. There's a couple of other things to think about just in terms of other sources. There are quite a few grants available for startup businesses that it's worth looking into. And that really is free money. They don't own part of your business, but it can come with strings. So, for example, a lot of grants you can only spend on specific things. With some grants, you have to report back in terms of what you did, how you did it, etc. And then finally, there's also access to free supports and services, which can be a really useful tool when you're getting when you're needing to kind of build that advisory team. Paula, you had a question?
Yes, hi. Regarding to debt, is there any Australian bank that they can that you can borrow money, but at the same time you have like a supervision, like a business advisor? So, or do they are telling you they can check your account, your numbers, and do not wait until the end, until you are completely done and take your car or your house or something? Or is any bank that can help you to grow up?
I would love to say yes, but I'm not aware of any bank that does that. Sid, I don't know whether you are. There are some, as I was saying, kind of these neobanks, which they basically make their funding decisions based on data. So, for example, there's a startup called Thrive, which it connects to Xero. It will connect to Xero. It will therefore have access to all of your data about your business, and it will make funding decisions based on that very specific data. But it won't supervise you. It won't give you advice as to what you should and shouldn't do. But they do have risk frameworks in place, so they won't. Technically, they won't overextend you, because it's not really good for them, because if they can't recover the money, by the time you go out, it can be very expensive to go after someone's assets. It can be a very scary concept, but for a bank, it's also quite expensive to do. Yeah, no supervision in the way that you're talking about, unfortunately.
Okay, thank you.
Balu, you've got your hand up as well.
So, one of the question I have is, you said that the loan interest will be equivalent to cash advance, you mean? Like higher interest?
No, I mean that you'll have to pay interest to the bank. So, you'll be paying interest at a base rate plus a certain number of points. So I don't know what I mean, it can vary quite widely again, but you borrow $100,000, you'll be paying a 7% per annum on that, for example. That's okay. What I mean is actual cash interest you'll have to pay.
Oh, cool. And it's hard to get the loan for new business.
It's not easy. Like I said, some of the neobanks are making it easier for small businesses, but ironically, even though they're taking your money in interest and they're protecting themselves in having a hold over your assets, it can still be a very risky exercise for a bank to give a new business a loan, and that's why quite often they're a little bit reluctant to do it.
Thank you.
Someone else got here? Yeah.
And when you get the loan from the bank, and also just a blue ask about the interest. If we simply just try to get some personal loan and without collateral, and in that case the interest can be very high. But if we have some collateral, for example, I have a car. I owe the car, and I pay the purchase car, and I pay in full price. So in that case, when I borrow the money from the bank, I can use my car as collateral. In that case, actually, the bank will reduce the interest for the loan. The reason is because if we fail to pay, they can take our car. And but if we don't have such kind of collateral, And in that case, the bank they will think we are highly risky. And the one way to help them to avoid the risk, they will charge high interest. So that's something that we need to pay attention. And secondly, when we're dealing with all these loan, and I think one of the legislation, maybe when you got time, and we may have to look, is called PPSA, Personal Security, Personal Property, a Personal Property Security Act. It's mainly just dealing with all these type of things. Just like sometimes, for example, we buy a car and from the car dealer, and but instead of pay the full price, we get kind of a personal loan and from the creditor, the bank, to buy the car. We still owe the car, but the bank will have a security interest on all car. So in that case, if we want to use same car as collector to borrow more money from another bank, they will check the PPSA register website. They will say no, and the other bank will have the priority. In that case, that will increase our interest rate. So the collector is one of the factors may have impacts or interest rate and for the loan we get from bank. Okay.
Yeah. Well, thanks, George. I'm really sorry to move on. We're running a little bit over time. If it's okay with you guys, I might just go through the final slide and then the homework, and then the questions that you have we'll take in the breakout rooms. Cool. But please keep those questions in your mind. Okay. So just so everybody isn't kind of drowning with overwhelm right now, the key thing here is to, once you start thinking about your business plan, break it down into smaller actionable steps with timelines. If you think all the way to the end and all the things you've got to think about and do, it's going to feel like a lot. So I would really, really encourage you to break it down into as small pieces as you can. So you've got manageable things that you can do this week, next month, within the next 3 months, so that you can keep yourself on track. And it's really important to have those actionable steps with timelines, but you don't have to do everything yesterday. You know, chunk it down and it will feel a lot more manageable. Think about your support system that you need, and that's your professional support system plus your personal support system. When you're starting up a new business, you need your personal support system as well. It's really, really important. You know, that might be family at home, it might be friendship groups, it might be business networking groups, but you need that support around you. And then also around, kind of tied into that a little bit, you know, being really clear about what your personal skill set is, because there is no one that's good at everything. So you need to find where your weaknesses are or where your areas of inexperience are and get help for them. It doesn't mean you've got to pay through the nose for advisors all over the place, but there are some key things that you will need to get advice on. And there will be things, and as you go through, if we go through the next sessions and the other different aspects of setting up the business, you know, you'll get to feel out kind of what those things are. But despite that, unfortunately, there's no way of getting around the fact that as a business owner, you will be wearing all of the hats. So, you know, regardless of what your speciality is, you'll have to be wearing a finance hat, a sales hat, a marketing hat, a product hat, logistics hat. But you don't have to be an expert in them all. Okay, so so we'll just leave you with that thought and those fine hats on those fine people, and quickly go to homework. So again, we will send these slides around afterwards, but some things to think about ahead of next week. We've given you some information around business structure. Start having a think about what's right for you. You obviously don't need to make a decision in a week, but just start thinking about some of the things that impact you personally. Have a crack at looking at the profitability of your product and how you might cost that out. In next week's session, we'll go through, as part of sales, I think we're going to touch on kind of some pricing strategies. But have a think about, you know, what it takes you to create your product, if it's a product, or how much your time is worth if you're offering a service. Again, have a go at your cash flow forecast. There's a lot of templates around. The specific template isn't important. What you need to start mapping out is where your cash is going to come in and the cash that's going to come out. And these templates will give you some prompts as to what they might be. Have a think about your market that you're operating in and who you are within that market. Again, that will just do some pre-thinking ahead of the sales and marketing sessions that will come over the next few weeks. And then do some market research. Have a look at what people are offering for the kind of service that you want to offer. And so start having a think and a look at what other people are offering within your market. Don't get freaked out if you think that someone's actually got the exact specific idea that you were thinking about that you thought was unique. It doesn't matter, and we'll explain why it doesn't matter in future sessions. But knowledge is power. So just have a look out there and, you know, just have some fun with it. Okay, cool. So if I haven't killed everyone, jump into the breakout rooms now. Go through with your mentors any questions that you still have. And we probably won't come back into the big group. We'll probably stay within the breakout sessions. If the breakout session that you're in, you guys want to continue a little bit beyond 7:30 and your mentor's happy to do that, or you want to stay in yourself, I think there'll be an opportunity to do that, but totally up to you. We realise everyone has lives. Okay, cool. See you in the breakout rooms. You've got plenty of time to digest all of this information. You probably will need to take a big breath after this session. Hey, Kumar. But you know, we're here to support you, and there's lots of resources available as well online. The business.gov.au is a really helpful site. So I'd encourage you to go and have a look at that as well, both for the business plan, but also generally it kind of gives you advice on things like grants that you can get, you know, advisors that you can access. It's a really good site. When you have time, already go jump on the site and bookmark the page.
I was going to ask, with regards to the funding, the grant funding, if one has already started the business, are there grants for them?
Yeah. There are a lot of different grants available for all stages of business. Some are tailored to specific industries. Some are tailored to specific growth stages. Some are tailored to specific funding around. Balu, the website will be in the slides that we send out. It's in the business plan link. This is why it's kind of good to start with that business.gov.au site. Because it will give you an insight into kind of the different grants that are available.
There are various council grants and state grants, you know, and then companies, they also have grants as well. So they have, you know, they have lots of funding there. Bigger organizations, they have their foundations like Deloitte or St. George, etc. They got their big foundation. They got millions of dollars to spare for a good cause. So, you know, always tap into various other. And then there are community grants. There is casinos. Casinos try to, you know, like put a facade. What is it called? I'm just, you know, forgetting the name of it. But casinos, they also have grants in front facade, and they got, you know, hundreds of thousands of dollars there. Okay. So tap into that.
It's to cleanse their souls.
I know. Woolworths Group, you know,
when the mining companies give grants.
yeah, absolutely. I mean, Minderoo. So Minderoo is part of mining Twiggy Forest, you know, charity, and Minderoo also has got money. So, you know, if you got some good ideas, etc., well, Minderoo is, you know, worth to contact. And Woolworths is a perfect example. Fresh food company. Yeah. You know, and on the back of it, they got casinos going. So, you know, and you know, the relevant to the topic, they got money too. So if you got a good idea, well, they got some money.
Yeah, Marcella's just posted a link in the chat as well to another source of grant funding. As well.
Yeah, that one is good too.
So have you got experience with them, Marcella?
I did. It was like a volunteer for a short time.
Yeah.
This is how I know them. Yeah.
But I thought the multicultural New Southwood grants were meant only for communities. I didn't know that they do businesses too.
There is business as well,
I think it depends of the purpose that you have. If they meet the criteria, you can apply for that.
Yeah. Yeah, and I think that's a key point as well. All of these grants are generally tailored for a specific purpose. So really, it's about reading the guidelines, for those grants, and just working out whether your business is, eligible to apply, and sometimes whether your offering can be tweaked so that you can take advantage of those grants.
Yeah,
I've never
some
suggest completely changing your business, but you can sometimes kind of tweak them, and that's quite useful as well.
So the grant I was talking about.
I've got some experience with some grants as well. Yeah, and I'm actually in the final stage of doing the acquittal stage. So the thing is, so what happens is you do have to align with what the organization is doing. So for this particular one that we've just finished was Parramatta Council. And this is for another business that I've got, which is a partnership. And we're offering workshops, online workshops during COVID. So the theme of it was the show must go on, and just speaking to cultural people just about different topics. And so at the end of it, we have to go and say, okay, how wide was the audience? What was it like? What feedback did we get? What demographics? So it's not just money given to you. At the end, you have to really show that you've met the objectives. Yeah. But the thing is, they can't give you funding twice for the same thing. So once you do something, the next time you go apply for funding, it's either an iteration of that idea or something completely different. So on an ongoing basis, I found it's not sustainable, but it's really good to just get you out there and push out.
That's good. The grant I would talk about, that is club grant. So I just sent out the link of that.
Thank you.
No worries.
Cool.
Thank you.
Okay. Now I had a list of questions that I kind of wanted to ask people, but I'm kind of also aware that there was a lot going on in those sessions. So does anybody before I kind of even touch on them, are there questions that any of you guys had from any of the material that you want to jump on now whilst it's fresh in your mind?
Well, filling the business plan, definitely. Not certain parts of it is okay, but not every part of it. I think, I did only bit of it because I have no idea what to do the other parts.
Yeah, no idea, because talk us through kind of what bits you were struggling with and then why, and maybe we can help.
For example, in the first page,
then you don't need to specifically pay yourself a wage, right? You can do directors' loans and fees and put in cash and take out cash without an issue. Another reason you would pay yourself from the business as an employee is it's an expense to the business. So it would lower your profit of the business. So if the business is profitable, I'd most likely, pay yourself a wage, and that way it brings down your tax payable. Did I answer your question there, Michael?
Yeah, definitely.
Awesome. How did we all go with the homework last week? Well, firstly, put your hands up if you think it was useful. If I don't see any hands, then I'll know that it's not useful. Two people. Okay. All right.
You're winning.
Sorry?
You're winning.
Yeah. So,
Sorry, Sid, my son comes, so I cannot rinse. I cannot put my hands because
okay. Yeah,
sorry.
that's okay.
But I think it
That's
was useful, so yeah.
great. Thank you. So the homework last week was getting feedback from 10 people. Did anyone do that?
That's the only one I did, and I think it was useful. That's why I didn't raise my hand because I didn't do them all, but I did the feedback.
I think that's the most useful one for this group, for sure, because you can never get too much feedback about your business, right?
Mm-hmm.
What feedback did you get, Andres?
In the group, we're developing a project regarding a mental health system. So we sat with 5 GPs. Some of them are in a regional, like rural areas GPs, and some of the city GPs to get information relevant to the platform, whether the system would be useful for them, would that save time, would that save money, would that make an impact in the patient, and we gathered all the testimonies, and it was really great feedback. And yeah.
Yep, and that's the purpose of it, because I've seen a lot of businesses jump in and do something and no one wants it. So I think Andres saved a lot of money and time by doing that kind of test. So did anyone else have any feedback on the homework?
Even I got the feedback. I have shared my questions on one of the WhatsApp group with the moms in the same school.
Nice.
And I really got very good feedback. And the progress is 3 of the moms who saw the questions, they asked for tutoring for their kids. If they would have purchased on website, they would have paid me around $150 to $200, but because they want face-to-face tutoring, I will get around $2,500 now.
Woohoo, Padma! Yes,
Thank you.
So,
And thank you. Thanks for
very
that.
happy for you, because that's exactly like why you get the feedback. You can also get customers because you're like, oh, you're building that. That's what I need. That's what I've been looking for. So, and what you just did there was distribution as well. You managed to get awareness for what you were doing. So if you did that on like Facebook groups, or you did it in community in your suburb, you'll probably find a few more. So, very happy to hear that.
Sure, I will do that. Thank you.
Who put your hands up if you know your revenue model already? No. So that's going to be key, right? That's going to be very important. And I think we'll cover some of that in next week's session on sales. It's like understanding what your product is and how you should price it. Why you should price it greater than your competitors. If you don't have a competitor, then it's like, should it be the cost value or should it be value add? So, what someone would pay you for that. So yeah, that's going to be important. Padma, part of your revenue model is like figuring out what someone would pay and then how much your time is worth. So what Michelle did on like how to value your time, I would run that framework for yourself, so then you could figure out, okay, I'm the only one that's going to be tutoring. How many hours do I have in a week? How much would be sustainable?
Yeah, sure. Thank you.
How much money do you need to succeed? Did anyone do that one? So in conjunction with the cash flow, I think for this week's homework, you're going to do like a cash flow projection as well. I think, hopefully. But basically, it's going to show you what all your expenses are, and then what your sales will be as well, and then figure out when that money runs out. So basically, when your money runs out is the gap you need to fill. So if you don't have any money now, then it means you need the funding now. something I advise for other people that are figuring out when to go full time as well. It's you really want 12 months worth of being able to just run the business without having to resort to a job. So you can test your product before going head first and build up savings of like 12 months to just help you not worry about anything else. And I know it's very difficult. It might take like 5 years to do it. But if you have a business idea that can still be relevant in 5 years, it's not like a tech product. It's like a restaurant, or it's like a product like you're selling something that you can find like in a few places. Then keep testing your idea over 5 years, get 12 months worth of like savings, and then launch. You're going to be way more successful doing that than like I'm just going to go and it's going to work out. It's very hard for that to work out. Like, yeah, even with money, it's very hard to work out. So you really need that safety net. So yeah, how much money do you need is important, because then you take that to your investor. So for those of you wanting to pitch on the final night, you really need to know what you're asking. Like, okay, investors, I need $1 million because I need to hire these people. It's gonna, the costs are gonna be this much, but over 24 months we're gonna recoup that or whatever. You just need a plan. And even if you're not going to investment, you really need to know how much money you need. Even if it's just on a guess, educated guess, hopefully. Yeah.
As we previously said, this is basically just an area of passion. But moving forward, I think it would heavily rely on state funding. And eventually, once we do turn it into a social enterprise, we'll probably rely on that.
Yeah. So in a sense, I guess there's a lot of compliance if you kind of go down the route of if you do it upfront right now. So I guess what we could do is to think about, okay, just do it without the compliance. There's a lot of cost involved also to set up a charity in Australia. So you just have to be careful because there's compliance and there's cost involved. And if you are just doing it on a kind of small scale kind of thing until you get a bit more experience and get more people on board and get more interest there, then it's going to be quite hard for you to justify all those costs and a lot of effort into compliance. So you just need to weigh up, whether it's worth going through all that at this early stage. You may want to just work on some ideas, get more people on board of your ideas, and then think about, okay, how can we expand it once people are starting to look at it a bit more.
Yeah, definitely. I think that's such valuable insights. And I think looking into the compliance side of it, that's what I've been researching. So maybe by next week, we'll be able to have this discussion in more detail.
Yeah. Look at ACNC. Their website is, there's a lot of compliance. So you just have to be mindful whether you can at this stage to comply. Otherwise, you just have to put it in the back burner for a while and then work on the idea and work on the what do you call it? The approach. If you do you have a kind of like a company at this point in time? Do you have a company, just a normal company to?
Oh no, I don't.
Yeah, I was looking to. I mean, I was looking to do kind of looking at charity a couple of weeks ago, and so I decided to just form a company rather than a charity, because a company, you form one company, basically it's Australia wide. I think there are certain rules, state-based rules around charities in different states.
Yep.
So, sorry,
what were you saying?
There are different state-based charity regulations around charities for each state. So just be mindful that if you want to register a charity, I think you need to register it across the different states also. So just be mindful that there's a Commonwealth regulation versus the state-based approach level. So just think about as you do your research.
As I registered the Charity Opportunities Australia, so I registered that in New South Wales, and this is company limited, incorporated. So that's just in New South Wales. And then if you wanted to register that interstate, this is CLG, company limited by guarantee.
And you have to do it all, and you need to do it all states, isn't it, Kumar?
Yeah, you need to do that. And we have been using a law firm for that. But yeah, I think it would be a common place to apply for it rather than just going for all the states individually.
Yeah, yeah. And if we start with the New South Wales, it's mainly New South Wales focused. In that case, incorporation structure, I think it should be good enough. But in the future, if we want to operate at a national level, particularly when we do the fundraising, and in that case, and the company structure can be very helpful. The reason is, for example, if we, as the investigation that Patrick already done, for as incorporation, and if we want to do the fundraising, and we need to get approval by state government. But if we get approval in New South Wales, it doesn't mean naturally we can do the fundraising even from our website and from the resident in Victoria and other states. And we have to get approval and from each state. So that's such kind of application process can be very time consuming. But if we register as kind of a public company by guarantee, limited company by guarantee, and in that case, and the company will operate at national level. It's not a state law, but federal law, Commonwealth law will apply. So in that case, once we have the capacity to do the fundraising, we can do the fundraising to from the resident across whole Australia. It's not only limited to the New South Wales. So that's something we can plan and in advance a little bit.
And you need to apply. Sorry, and you need to apply for fundraising separately.
Separately.
And I believe that goes through fair trading. So firstly, in order to register a not-for-profit, you register it at fair trading. And then you go to ACNC.
Yeah, I think the organization call it some, the agency in charge of alcohol.
Yeah,
sorry.
I'm dealing with that, right? Yeah. Game and alcohol.
So the message for Fibra is that it is, you need to make sure that you are absolutely sure where your target audience are in terms of your fundraising. If it's going to be Australia-wide, then you need to have a different approach. If you're talking about just state-based, then there's a different approach. So that's why we are going back to your business model around, who are your target audience, which location are you going to play in, and if it's going to be international, then there's another level of complexity again. You know what I mean?
Yeah, for sure. I think, of course, it's really important to do your initial research and make sure you try having a structure that works best. I think initially it would probably be good to start small, so perhaps with a New South Wales focus, and then expand later on. So I'll definitely be doing my research, and I will keep you updated next week as well.
It takes time and efforts to go through, switch between structures. So just think it through. And if you think like in 6 months, 1 year, or in a couple of years' time, you might be expanding into state. So, keep CLG in mind.
Yep, we'll definitely do. Thank you so much for sharing that.
No problem. So we have got a legal guys coming in the next couple of weeks. So why not do some research? Don't apply it until you speak to someone. Perhaps they may give you a bit of idea, throw some ideas with them, then only kind of crystallize it. You know what I mean? So do some desktop research, get all your facts ready, get all your questions ready, and then when we have that session next about 2-3 weeks from now, then you can then basically ask them in terms of, okay, this is what's happening. What I'm not sure whether ACNC has. I don't know whether George can answer this question, but whether ACNC has kind of like a phone, support line, or
They do.
just ask.
They do.
They do.
They do. Starts from 1 o'clock, 1 to 5.
Yeah. So you can use those. Make a call in and just ask them questions. You know what I mean? Yeah. Sorry, George.
I think before the close down, they used to have office and in Victoria Building, I think, and in the Central Station, close to Central Station. But now they moved to the Parramatta. And I remember, and a couple of years ago, and when having another non-profitization, we asked about fundraising question, and we still can speak with the staff member, and they can come out and speak with us. But now, even before the lockdown, phone consultation only. They don't provide kind of face-to-face consultation service anymore. Yeah.
Okay, cool. I'm conscious that we got 5 more minutes. Any questions from the group?
Maybe I have two short comment here. And just now, and when Michelle and today is very informative presentation, cover lots of information. But when we decide very specific business structure, we also need to think a little bit over, because here it provides us with some basic structure, solo trader, company, trust. But even within the partnership or within the company, they also have different types of company: private company, public company, unlimited company, and limited company or limited company by guarantee. And they all slightly different. And so this one provides a good guideline for us, just the general direction. But when we truly make registration, we do need to select very specific type. So they leave me more homework to do, I think. Yeah. And also the second point I want to make is here. And when we the financial model, the revenue model, taxation model is also can link with the business structure, and also some technology element here is all relevant to the business model. For example, here I know that we have some just like actually a few colleagues here want to do some online platform. So if we do the online platform, and then maybe we need to think about the issue like this: team, technology, and now some technology is really help us save money. For example, if somebody want to provide kind of a web server or internet service and cloud computing service, and traditionally, if we want to provide kind of a data service, and we have to buy all the equipment, data server, that can be very expensive because we don't know and what computer we need to purchase. For example, if we have 500 user only, in that case, the web server, and we don't have to buy the web server have a big capacity. But if we have 50,000 and user, in that case, the web server we purchase can be very expensive. But now with cloud computing technology, we don't have to buy all this hardware. We can simply just buy the online service, cloud computing service, and that can save lots of money. So as starting company, and it's always worthwhile to do some investigation to look at existing technology. It may save lots of money, and when we start our business.
Mm. Yeah. Good. I'm conscious that we got 1 more minute before we end. So if there's nothing, so we will see you guys next week, same time at 5:30. Do reach out to us if you got any questions. There's an email entrepreneur for us at Opportunities Australia. So do reach out if you need help, but save your questions, and certainly look forward to seeing you guys next week.
So shall I break the room into the main one? Probably.
I don't know.
I think so. I saw there's 7 people and some people keep. in the main room already. Maybe we should back to main room, I think.
Okay, close all rooms.
Yeah.
Closing that.
Yeah.
Did you guys like it? Any comments, any questions? Thank you, Michelle, George, Patrick, Sydney, all of you for being here.
Yeah.
And well done for getting through the sessions as well. That was a lot. Everyone needs a nap now.
The finance part is always like always the hardest one. It's very heavy, and it's very abstract. It's not like something easily understandable. It's like made up terms, right? They're made up words.
Hey,
talking about the financial system. The financial system.
But I think it's very useful, and I think Michelle gives very good example to explain the difference. And I
excellent presentation. Thank you.
Cool. No worries, no worries. And we'll be sending all those slides round afterwards, so you can have some time to kind of really digest that information.
Yeah.
Right. Well, do reach out by email if you need anything else throughout the week. But thank you again for coming.
Cool.
Have a
See you
great
next week, guys.
Thank you.
Thank you.
Pleasure
Have a
to
good
have you all.
night.
Bye.
Have a great night. See you.
Thank you very much.
No worries.